has a different tone to it. We get tear sheets every Tuesday morning on revenue and free cash flow from most of our companies. So we get a pretty good read on a weekly basis. And so far, and this is kind of interesting, no slowdown yet, no slowdown. And these are consumer goods and services. So we have not seen a slowdown. And so, and the reason we care about this data is we're trying to make a decision, excuse me, on what we're going to do with inventory going into holiday in the US. We've got a $110 million decision to make in the next week. Do we build inventory with the assumption that demand remains constant, or do we feel in Q4 that demand will pull back because the Fed's raised rates? And so we've made the decision. We're going to go balls to the wall, build out for Q4. We don't see the recession in the next few months. We think it happens next year, but we don't know. And this is the same consideration that every company's trying to make. Inventory matters in a recession because you get caught offside and your capital's tied up in inventory. But we don't see the slowdown yet, which is crazy. We can't hire anybody. Unemployment's still under 4%. And so when you try and hire anybody in food services, you can't. 15 minimum in California in a restaurant. You can't even hire people for $22 an hour. So something's really nuts here. And I think what it is that money is still sloshing around. That 6.7 trillion is still sloshing around the market. And that's why we haven't seen the slowdown yet. Everybody says it's coming. Everybody says we're in a recession. I guess the question is, where's the terminal rate? I mean, at what point do they indicate that they're going to stop? Because another 75 basis points already anticipated in the 2-year. You're about 4.5% on 24-month money. The stock market is fibrillating. It's having a lot of volatility. The VIX is trying to figure out the moment the Fed pauses. And so this is the interesting challenge. I don't care if you're in crypto, your equities, or bonds. What happens in these cycles, and this is always a challenge, and we have a good example in recent times, 2020, in the middle of pandemic, total chaos around the world and the markets. The stock market actually did quite well because there was all this QE coming into it, this quantitative support and the Fed printing money. But all of the returns, 95% of the returns came in basically 18 trading sessions, 18 8-hour periods, where you had that volatility, 2,000 points up, 2,000 points down. You just didn't know which day those up days occurred. And so if you were trying to time the market, you missed the entire returns of the year. The same thing is going to happen here. As soon as people figure out or feel or just get the tone from the Fed that they're going to take that pause, you're going to have a violent swing up in the market. And if you're not in the market that day, it might happen that way. But let me suggest a different reason to start going long Bitcoin, which has nothing to do with foreign currencies, but a lot to do with policy in the United States. There's two bills floating around, but let's talk about the one that has the chance of actually getting passed in the US after November 8th, which is the midterm elections. It almost went to markup last week. It's called the Stablecoin Transparency Act. Now, this has nothing to do with Bitcoin, but it has a lot to do with the tone of regulation. And the reason I think it's interesting is they're trying to solve for the challenges that occurred in these collapses of stablecoins that were built around algorithms. 62 billion got erased. The regulators got upset about that, although the majority of that capital, because it was decentralized, was in other countries. But this act is very simple in nature, which is why it may pass. It's being supported by both parties. And the reason that's the case is that it makes effectively the US dollar the default payment system worldwide, which everybody can get behind. So if you have USDC or any other stablecoin that's backed by the dollar, and the test to get it regulated is very simple. You're going to get audited every 30 days. It has to be backed up 1-to-1 with a dollar or a treasury bill. All the treasury bills backing the coin or the token have to have a duration of less than 12 months. And if you're willing to go through that scrutiny, they'll issue you a license. Now, if that were to happen, there's another reason as well. 45 days ago, you could take and you could lend or stake your USDC within your wallet. Let's say you had a wallet at Circle. You were making 3.8 to 5.2% for 30-day or 6-month or 1-year contracts. That was the spread. And you were putting that out very easily on their platform. Today, the only interest you can make is 50 basis points when and you're looking at 2-year treasuries at 4.5%, there's no competition. Part of the challenge USDC has is it wants to get regulated so it can act as a sweep account and start to be competitive against bank accounts that are offering 1.5, 2% interest rates. So you have no incentive to keep your stable coin in your wallet. You're transferring back to US dollar and parking it back in a fiat currency where you can get risk-free, basically a treasury bill for 24 months, 4.5%. Now, the company's not allowed yet by regulators to do that. That's the circle for USDC. So they're in an uncompetitive situation, and it's a disadvantage. That's why they want this regulation. They can start, even if they act as a bank, they can compete with bank interest rates. But you have your money sitting in USDC, you're basically making nothing in interest. That's the real challenge. Economic geography. So if you're transferring from US dollar to Swiss franc through an ACH, you're going to pay a lot of fees, and you pay a lot on the SWIFT transfer as well. And those banks make millions of dollars each quarter off those fees. If all of a sudden you were allowed to use a stable coin at a fraction of that cost, and both regulators allowed for that transfer, that would really hurt profits in banks, not just JP Morgan. And so you're seeing a lot of that issue right now in the equity values. You would think as rates go up, these bank stocks would be moving north. No, they're hitting new 52-week lows. And part of this is the market trying to anticipate the disruption when it's going to happen. Here's a question for every investor to think about. There's a risk in investing in Bitcoin and all crypto. There's also a risk of not investing in it, because if it's true that it becomes the 12th sector of the S&P in the next decade, some of the value in financial services stocks, like banks, like money center banks, are going to transfer to these new technologies, and you simply don't know when that's going to happen. So my thesis is you should have some crypto in your portfolio because you don't know when that's going to occur. And if you completely don't have exposure to it, you may miss participating in the growth of this 12th sector, the S&P. We're constantly rebalancing, as we do at the end of every 30-day cycle. We look at our positions, not just in Bitcoin and crypto, but across the portfolio. Fixed income has been as challenging as stocks. They've gone down just as much in the last 18 months. So it's been a very difficult time for every asset class. Regarding Bitcoin, though, our own operating procedure, we can't own more than 5% of the operating fund in Bitcoin. So we also have positions in ETH and Solana and all kinds of other, we're just looking at putting a position on in Pollen and Helium, which are really eclectic projects around decentralizing telco. But the whole point of this is that you just simply don't know when these asset classes are going to move. I have a personal speculation around regulation. I talked about that earlier, that if the Stablecoin Act gets put into law, that will be a signal that all crypto will be regulated at some point. Some people feel good about regulation, others don't. But here's a fact to consider regardless of your position. Most of the sovereign wealth funds that I work for as an indexer have zero position in crypto of any kind. When you ask them if they're going to buy anything, they want the granddaddy, which is Bitcoin.